Buy balance brought down opening BP to cash, bill cash paid for the year ended 31st December 2021 and a balance sheet as on that date. He do not have the closing balance. He started with how much money? 20 of the year. Charge interest on capital at 6%. Buy balance brought down 3,000. To cash paid 22,000. To discount receive 150. Hello my dear student. I am Dr. B.S. Subramania, called by name Dr. B.S.S. Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Financial Accounting, second semester, Unit 1, Session 2 of BCom in favor of Accounts from Incomplete Record. Accounts from Incomplete Record is nothing but single entry, one-sided entry. For every corresponding debit, there is no corresponding credit. Now, we are converting single entry to double entry. Then we have to prepare debtor account, creditor account, sometimes BR account, BP account, cash account, even statement of affairs. I will explain while you are solving the problem. We'll move on to problem now. Now, before going to form, I'll give the format of BR. To balance brought down opening BR. We started the opening BR. Then we received from our customer debtor. Still they have not paid. Debtor BR received during the year. Total amount they have to pay. Out of that, we received from BR honored. Your BR has been reduced. By sundry debtor, BR receivable dishonored. When you become dishonored, no, what will happen? Debtor account will be raised. This entry will be debtor account debtor to bill receivable account. How it will be? Debtor account debtor to bill receivable account. By sundry creditor, whatever the bill you given, that is endorsed to creditor. What is the entry? Sundry creditor account debtor to bill receivable account. Then whatever the difference is there, this is a closing balance which we have to receive from our customer. We start with to balance brought down opening BR. We have to receive from our customer. Sundry debtor BR received during the year. Still they have not paid our money. Here by cash received for BR we received. By sundry debtor, bill has been dishonored. Whatever the bill is given has been dishonored. Once again, they become our debtor. Entry will be debtor account, debtor to BR account. By sundry creditor, whatever the bill is given, I transfer to my, what's called, my creditor. Bill receivable endorsed to creditor during the trading period. Whatever the difference comes, this is a closing BR. Then, this format you have to learn. Then bill payable, opposite to BR. By balance brought on opening bills payable. To cash we paid the bill. By sundry creditor, bill payable issued to creditor. During the year, by sundry creditor, bill payable has been dishonored. Once again, your creditor account will rise. Then whatever the difference comes, that is a closing BP. This format you have to learn. By balance brought down opening BP. To cash, bill cash paid. To creditor, bill payable dishonored. Your creditor account will be raised. By sundry creditor, bill payable issued to creditor, so that your creditor account will be reduced. Once again become dishonored, your BP account will be raised. This is closing BP. This format is slowly you learn. Now, we'll go with the first problem. This is for 15 marks. Anthony does not maintain proper books of account. From the following information, prepare trading and profit and loss account for the year ended 31st December 2021 and a balance sheet as on the date. This is 31st December 2020 last year. This is the current year. 31st December 2020 is nothing but 1/1/2021. The closing balance of the last year become the opening balance for the next year. So 31st December 2020 is nothing but 1/1/2021. This is a closing date, 31st December 2021. They have given debtor, opening balance, closing balance, stock, opening balance, closing balance. So when the opening balance is given, you have to prepare an account called statement of affairs, nothing but a balance sheet, find out the capital. Debtor becomes an asset, stock becomes asset, furniture becomes an asset, creditor becomes liability. Opening. I will repeat. Debtor becomes asset, stock becomes asset, furniture becomes asset, creditor is a liability. This is a analysis of other transaction. Cash collection from debtor, cash received in the debtor account by cash will come, cash paid to creditor, debit entry of the creditor, to bank account or to cash paid, salary paid. This is comes under cash account. Rent paid is an expenditure. Office expense and expenditure. Drawing means your cash account will be reduced. Fresh capital introduced. Your cash account will be raised. Cash sale. Cash account will be raised. Cash purchases. Your cash account will be reduced. Discount received is nothing but non-cash transaction. Return inward means sales return. Return outward means purchase return. Bad debt is allowed. He had rupees 2,500 in the beginning. We mean to say that he do not have the closing balance. He started with how much money? 20 of the year. Charge interest on capital at 6%. So first you have to prepare statement of affairs. Come back here. Debtor 9,000. Debtor 9,000. Then come back here. Stock 4,900. Then furniture 500. Opening cash they are given 2,500. Creditor given 3,000. Add this figure. This is 5 plus 9, 14, 19, 3, 12, 16. 16,900. The difference will come 13,900. Out of asset minus liability here. Assets minus liabilities is equal to capital. This you have to learn. Asset, what you learned first PUC also, this you are learning in the first PUC. A minus L is equal to C. What is A? Asset. L means liability. C is equal to capital. So all assets on the opening balance group. So if you have prepared the what's called the balance sheet at the beginning of the year, it is called statement of affairs. If you prepare at the end of the year, it is called balance sheet. So all assets on the asset side, the creditor is a liability, difference is the capital. Then they have given the opening balance of cash, but they are not given the closing balance. So we have to prepare cash account to find out the closing cash. Slowly. So cash goes on the rules of real account. What the real account says, debit what comes in, credit what goes out. Same principle we are going to adopt. Come back here, cash book to find out the closing balance. We started with 2,500. This is one account. Then come back here. Collection from debtor means we received the amount from the debtor. Debit what comes in. We started with 2,500. How much received from our customer is 30,400. What will happen? Your cash account will be raised. What is next one? This over. We cash paid to creditor. When cash paid means cash is going out. By creditor, how much you paid? 22,000. Then come back here. This over. You paid the salary. You paid the rent. You paid the office expenses, you paid the drawing. All will come here. We paid the salary, we paid the drawing, we paid the office expenses, drawn from the owner 1,500, cash account will be reduced. Then fresh capital introduced means the capital is coming, addition capital, debit entry. Addition capital 1,000. Then cash sale, by selling the goods, we receive the cash, debit entry. Come back here. Purchases, when you cash purchase, cash is going out. So cash purchase is there, discount receipt won't come, bad debt won't come. So you have got a balance of 2,500 here. See the problem here. Furniture at the beginning 500, 750 at the end. Whatever the difference 250 we have purchased during the year. How much furniture is purchased during the year? 250. Start with 500, end with 750. How much is purchased? 250 is purchased. Your cash account will be reduced by 250. So we started with opening balance of 2,500. How much cash received? 30,400. How much additional capital? 1,000. By making the sale, how much you cash received? 750. Your cash account will be raised. We paid to creditor, cash account will be reduced. By salaries, cash account will be reduced. By rent, cash account will be reduced. By office expense, cash account will be reduced. By drawing, cash account will be reduced. By cash purchase, automatically the cash account will be reduced. Furniture purchase, that is not there. Started with 500, end with 770. How much is purchased? 250. Balance carried down is the closing balance. Out of 34,650, if we deduct all these items, we get 750 is the closing balance. Then the value of furniture on 30th December was 500 and 31st is on 750. The difference in the value of furniture 250 is considered as furniture purchased during the year. What you have done. Now, total debtors account. This is your balance brought down, cash received from debtor, return is sales return, bad date, by balance carried down closing debtor. Whatever the difference come, that is nothing but credit sale. How we start? We start with opening balance brought down 9,000. How much cash received? 30,300. Return inward means sales return, bad date, balance carried down. The difference is 34,500 is considered as credit sale. Then total creditors account, by balance brought down 3,000. You have paid the cash 22,000. Discount received 150. Return outward means purchases return is 400. Balance carried on closing. The difference will come 21,800 is nothing but credit purchases. So we got the credit sale and credit purchases. You have got a cash sale also, credit. So we put in the format of trading and profit and loss account. So we have to prepare trading and profit and loss account for the year ended 31st December 2021. So all the trading accounts start with the opening stock of 4,900. When you make the purchase, your cash purchase is 2,500. Your credit purchase is 21,800. Totally 24,300. Out of return outward is 400. Actual purchase becomes 23,900. Come back here, sales. Your cash is 750. Your credit is 34,500. It will come 35,250. Out of that, return inward 500 is deducted. The balance is 34,050. That's the next sale. Your closing stock is given 6,600. Totally 41,350. Out of 41,350, if we deduct, no difference is 12,550. We can say this is gross profit carried down. Then we have to prepare profit and loss account. By gross profit brought down 12,550. By discount received is 150. Salary paid 6,000. Rent paid 750. Office expenses paid 900. All from the cash book, no. Bad debt 100. Interest on capital 13,900 into 6 by 100 plus 1,000 into 6 by 100 into 6 by 12. This is 300. So totally it will come 864. The net profit is 4,086. So here your gross profit brought down 12,550. Your discount received is 150. Your salary 6,000. Your rent paid is 750. Your office expenses is 900. Your bad debt is 100. Interest on capital will work out 864. Your net profit is 4086. We'll move on to final balance sheet. Your closing cash balance as per the cash book 750. Debtor 12. Closing debtor is 12,500. Closing stock is 6,600. Closing furniture is 750. Closing creditor 2,250. We start with the opening balance of 13,500. Add additional capital 1,000. Add interest on capital 864. Add net profit 4086. 4 plus 6 10. 1 plus 6 7 plus 8 15. 1 plus 9 10 plus 8 18. 1 plus 3 4 5 9 1. Out of that, how much drawing have been made? 1,500. 500 3 8. 18,350. Add this 0. 5 plus 5 10. 1 plus 3 6. 2 plus 8 10 2. Come back here 0. 5 plus 5 10. 1 plus 7 8 plus 5 13 19 26. 2 plus 2 4 plus 6 10. 1 plus 1 2. It will tally for 20,600. How we start? We start with the opening balance. Add further capital, introduce 1,000. Add interest on capital 864. The net profit during the year is 4066. This is your plus. This is your plus. This is your plus. This is your minus. So the net amount come 18,350. The closing creditor is 2,250. Your closing cash as per the cash book is 750. Your closing debtor as per the debtor is given 12,500. Your closing stock is 6,600. Your closing furniture has the given is 750. 500 at the beginning, end means 750. How much purchase? 250. So 750 is there. Totally it will tally for 20,600. Hope understand. Very easy. 15 marks question. One major question will become how it starts. Now, once again, I will explain. So they will give the problem like this. This is your opening date. This is your closing date. Statement of one to find out. Your opening cash is 2,500. Debt are 9,000. Stock 4,000. Furniture. The difference is 13,900. Then they have given the opening balance of cash. They are not given the closing cash. So you have to calculate closing cash. Start with 2,500. How much received from the debtor? 30. Debit what comes in, credit what goes. So real account principal. What's the real account says? Debit what comes in and credit what goes out. How much money received? 30,400. How much capital received? Addition capital 1,000 by making the cash sale. How much money received? 750. How much you are having now? 34,050 in the cash box. Out of that, we pay the creditor 22,000. We pay the salary 6,000. We pay the rent 750. We pay the office expenses 900. Drawn by the owner is 1,500. We make the cash purchase 2,500. We purchase the furniture by cash 250. The difference is 750 at the end of the year. Then we move on to prepare debtor account, credit, find out the trade sale and trade purchase. Two balance brought down. It is 9,000 by cash received from debtor. By return inward means sales return. By bad date, by balance carried down. The difference is 34,500. Then we move on to creditor account. By balance brought down 3,000. Two cash paid 22,000. Two discount receipt 150. Return outward is 400. Closing creditor is 2,250. The difference is nothing but credit purchases. We'll move on now. Trading and profit and loss account. We start with the opening stack. Purchases be made. Then we have the sales. One cash sale. One credit sale. Return inward return. Net sale is there. Closing stock. Difference will come 12,550. That's a gross profit carried down. Then gross profit brought down to profit and loss account. This is trading P&L account. This is nothing but profit and loss account. Discount received. Salary paid. Rent paid. Office expense paid. Bad date. Interest on capital. This is for 6%. This is for 6%. Totally it work out 864. Net profit is 4086. Then come back this closing. Your closing cash is 750. Debtor is 12,500. Stock is 6,600. Furniture is 750. Closing creditor 2,250. Start with the opening balance. Add additional. add interest on capital, add net profit minus drawing. It will come 18,350. So your balance sheet will tally for 20,600. Hope you understand. So I prepare debtor account, I prepare creditor account, I prepare cash account, and we prepare debtor and creditor to find out the credit sale and the credit purchase, cash account to find out the closing cash, and I prepare a statement of it to find out the opening capital. Then I prepare trading account, P&L account, and a balance sheet. Very, very simple. Only must have a patience to prepare debtor account, creditor account, cash account. If the opening balance is given, you have to prepare statement of a nothing but a balance sheet. Hope you understand. We'll have some more problem next session. Till then, goodbye. Meet in the next session.